How is everyone doing? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. Yes, I'm still sporting my Eagles Super Bowl championship t-shirt here this week as we're going through the rest of the week. But in today's episode, I wanted to talk to everybody about an investment product called TIPS, Treasury Inflation Protected Securities. I have talked in times past about different savings bonds, whether it be the EE or the I bond, but I saw an article in the Wall Street Journal that basically has this conversation about should you consider investing in TIPS. Now, I have to put this disclaimer out there at the beginning, like I'm not an investment advisor. I don't sell investment products. I'm not recommending that you do this. It was a good article about this product, and I wanted to bring it to everybody just to let people know that it's out there. And at the end, after going through the article, I want to show everybody the TreasuryDirect website, which I think is a phenomenal website. And I think too many people either don't know about this or don't realize that it's out there. And it's a great, great option to consider for some personal investments. So with that being said, let's jump into this Wall Street Journal article. So this is called Inflation Isn't Going Away, Some Tips on How to Buy TIPS. So inflation-protected securities are offering close to their best yields in more than a decade. Buying them has never been easier. So inflation won't stand down, but you can stand up to it. So this week, the government reported that the consumer prices rose 3% in January from a year earlier, reversing inflation's sluggish decline from its 2022 peak of 9.1%. Now, he says he's written before about Treasury inflated protected securities. These days, TIPS are offering close to their highest yields in more than a decade, and buying them has never been easier. He says, I praised TIPS in my last column, but many readers rightly called me out for not offering more specifics. Should you buy them directly or through a mutual fund or exchange traded fund? Should you buy TIPS in your taxable accounts or your retirement plan? What are the pros and cons? So then he gets into, let's start with the basics. So TIPS first issued in 1997, mature in 5, 10, or 30 years. Their principal value adjusts up with inflation or down with deflation, as measured by the government's consumer price index. Although they pay a fixed interest rate, it's applied to the changing principal value, enabling the dollar amounts of the interest payments to track the cost of living. TIPS funds and individual TIPS are volatile if interest rates move sharply, as many investors learned painfully in 2022. However, if you hold TIPS to maturity, you can be sure that the purchasing power of their interest payments plus the principal amount you'll get back will keep pace with inflation. You'll know exactly how much cash in constant dollars the TIPS will generate along the way. That's the main reason to buy directly rather than through a mutual fund or ETF. Although funds are more convenient, in most cases their holdings are dynamic, so their future cash flows aren't precisely knowable. Individual TIPS come with some quirks. None mature in the years 2036 through 2039, although they will become available in the next few years. If inflation increases the face value of TIPS, that growth is federally taxable in the year it occurs, even though you can't collect any cash from it until the TIPS matures or you sell. TIPS are exempt from state and local income tax. To avoid this phantom income tax headache, the best place for TIPS is generally in a tax-deferred retirement plan, like an individual retirement account, Roth IRA, or 401k. I think the best solution is to build a TIPS ladder in your retirement account. Each rung consists of a block of TIPS maturing in a successive year. As each block matures, you can use it to buy TIPS that pay off farther in the future, or to fund your living expenses in retirement. Laura Kelly is a 64-year-old editor and website designer in New York. A couple of years ago, she and her husband, Warren Berger, determined that their income was likely to decline over time. I realized that even a regular rate of inflation would be eating our lunch literally very quickly, she recalls. Kelly spent months searching inflation hedges, finally finding tipsladder.com, a free website run by Kevin Essler, a retired software engineer. Essler says he intends to keep it free. I knew what our Social Security would be and how much more we would need to pay our bills, says Kelly, so I knew exactly how much I was going to put in overall. At tipsladder.com, Kelly downloaded a spreadsheet that told her how many TIPS she needed to form each rung of a 20-year ladder, offering a stream of inflation-adjusted cash flow in the amount she sought. It took her about an hour to buy the tips in the couple's retirement accounts at Vanguard.com. She says, although she and Berger still have some money in the stock market, Kelly is happy and relieved that the tips ladder assures the couple of a constant payout into their mid-80s. I can relate to her relief. I'm incorrigibly busy and lazy. For nearly 2 years, I've been telling myself to build a tips ladder, yet in the few minutes of spare time I can wring out of my day, the last thing I want to do is think harder than I need about my investments. Right around New Year's Day, though, I had free time. I had recently committed publicly to buy more tips, and tips were yielding well over 2% above inflation. So I sold my tips mutual funds and built a ladder with the proceeds. It turned out to be almost shockingly easy. At tipsladder.com, I downloaded a spreadsheet that told me how many tips I needed for each year, including each issue's CUSIP or unique identifier, so I wouldn't buy the wrong one by mistake. The site also told me the average annual inflation-adjusted cash flow my ladder will produce through 2055, tens of thousands of dollars a year in peace of mind. I may be in a wheelchair or a wooden box by then, but my heirs could use the money. I bought all my tips in the secondary market rather than directly in a treasury auction. That way I could build the ladder all at once rather than having wait for new issues to come to market. So keep in mind this whole bought my tips in the secondary market rather than directly in a treasury auction. We'll come back to that in a few minutes. Unlike in an auction, I did incur small expense. Across my IRAs at Fidelity, Charles Schwab, and Vanguard, I estimate I paid something like 0.05% in trading costs. Still, that's less than the annual fees at most tips mutual funds or TFs, and it's a one-time expense, not a recurring toll. Each year, I'll have to remember to reinvest a maturing issue, but that's what calendar reminders are for. Some readers ask whether in the future, given the reckless behavior of politicians, inflation statistics might be faked or treasuries might become risky. Anything is possible, so I don't think you should put all your retirement assets in tips. Of course, if treasuries become unsafe or other assets may suffer too. And tips are for protecting your wealth and not making it grow robustly. So they're not ideal for young investors, but for retirees and people within shouting distance of retirement, there may be no better way to climb towards security than a tips ladder. So again, very interesting thoughts here on potentially using tips as a vehicle, particularly for retirement. So now, let's go on here. So this is actually one of my favorite websites because first of all, there is a ton of information on here. So this is the TreasuryDirect website, and this is out here. You can find it at www.treasurydirect.gov. This is put out here and managed by the U.S. government, the Department of the Treasury. And there's so many things on here. It has a whole bunch of information about savings bonds, treasury marketable securities. You could get into treasury auctions. It's all about all about auctions, how auctions work, laws and regulations, research center, government uses. But basically you just log in, create an account, and then you can start buying. So let's go here and let's just look at about treasury marketable securities. So you go on here, and as we go down, it basically says types of treasury marketable securities. And you'll notice here what's at the bottom: Treasury inflation protected securities, or TIPS. And it just says TIPS are treasury marketable securities whose principal is adjusted by changes in consumer price index. TIPS may pay interest every 6 months and are issued in terms of 5, 10, and 30 years. You also have treasury bonds, treasury bills, treasury notes, floating rate notes, FRNs, separate trading of registered interest and principal of securities, also known as strips. So there's a lot of really great stuff in here, but let's go into treasury bills for a second. So we could go in and look at treasury bills, and it gives you this whole breakdown: treasury bills at a glance. How do I, for a bill, how do I buy a treasury marketable securities? Like, what do I do? All the related topics. It basically tells you everything that you need to do. Again, when they say that, this stuff is very easy. They're not kidding. A lot of this buying, a lot of this stuff is easy. And then you could go in here, related topics. We could go to tips, treasury inflation protected securities, tips at a glance, how tips protect you against inflation, how and when we adjust tips for inflation. Here's where to go. All right. Now I want to go. Let's take a look at Treasury bonds for a second here. So we have Treasury bonds, and we could see all rates. Treasury. They have an auction calendar here. And then let's take a look at savings bonds. So we could go into savings bonds, and these are great, like EE bonds, I bonds. So there's a lot of stuff, and you could buy a lot of this stuff, and but like I said, you could buy Treasury bills. So matures in 4, 6, 8, 13, 17, 26 at 52 weeks. Your minimum purchase is $100. And it's really good. I mean, you could basically buy 6-week Treasury bill, and then what's cool is like you could set this stuff to just like automatically roll over. So it's it'll just keep buying the same things here. So if we want to let's go to savings bond, want to buy a bond. So Series EE savings currently paying 2.6. Series I savings bonds currently paying 3.11%. Not terrible. You could probably still get some CDs out there with higher interest rates, but overall, like not too bad. But back in like 01, 02, I mean, this was paying like 9% interest on a Series I savings bond. It was fantastic. So like I said, if you've never checked out the Treasury Direct website, I highly recommend go on and check it out. I think it's an awesome website. People, when interest rates were at zero and these Treasury bonds were paying nothing, people really like forgot all about this as a potential investment vehicle. But then all of a sudden, as interest rates increased, it was like, yeah, boom, yeah, let's go to Treasury Direct and let's get some bonds. Because they can be, like I said, they can be very good investment vehicles. Again, I preface it by saying like, hey, look, I'm not, is from a tax standpoint, like I'm not an accountant. You should always, call your accountants, call your lawyers, call your professional advisors, ask them what you think you should do there. But I just wanted to let people know that, hey, look, tips is out there. The Treasury Direct website's out there. There's a lot of great potential investments that you can be made through the Treasury, and just something to think about someday if you're ever curious about this stuff. So, but with that, I will basically wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on Rumble, YouTube, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, remember to check out some of the other content on the channel. I will see everyone again real soon. Thanks a lot.